Good morning. What's going on, guys? Happy Thursday. Thursdays are fun around here. We have quite some fun. Thursdays, Fridays, end of the week. Some of you are like, finally, end of the week, get out of here. Whether it's normal work, the market beating you up. I have a couple interesting ideas. For some of you, I'm not going to be able to take the pain away, of course, right? Certainly, for some, getting hurt more than others, right? Depending on situations and in the way in which you trade. I'll start it from the top. So let's, since we're sort of all in the same sort of stratosphere. Whoops, our portfolio is basically revolves around value and specifically the recent Dow play, right? Now, we entered most of this right over here on the 5th. We got sort of a remarkable gain from that, right? Pretty remarkable gain. And so most of our portfolio is pretty much in the money. And then this week we've been taking profit on short-term positions, right? And so as we take profit on short-term positions of value, and while we continue to try to get into value in certain areas, for instance, one being energy, right? We got this preemptive trade over here, and then the Suez Canal gets stuck, and who knows what's being affected with price here. Again, we're still very bullish on value, so that's predominantly our entire portfolio. And then the other that we had to take profit on was banks, and we're still waiting sort of for the opportunity here. One thing to note, of course, is that on the small cap side, regional banks are getting hit over here, and that this average is very much is very far away from the tickers that we trade. Again, we trade actively. We trade individual tickers, right? So even when we look at something like the SPY, I'm going to make a comment here that it's not going to take the pain away, but it's the reality. The S&P is only just over 2.5% away from its high. From its all-time high, the S&P is 2.5% away. Now it's a little bit more because pre-market, but we'll see what happens again. Probably erase that at the open. But 2.5% away from the all-time high. Yet, depending on the tickers you're in, you could be down like 20% or something, right? You could be down 10%. It could feel like your entire portfolio got corrected in some areas, right? For those of you that are have been sort of holding since this period over here. Otherwise, again, if you've been trying to do some of these trades that I have been doing, where we're trying to preempt a growth sort of rebound, since tech has been really beat up. And so this is a different chart when you look at the NASDAQ being down 8-9% from its high. What we're trying to do is, again, we're trying to buy at the low here, and we're probably going to continue doing it. I could go ahead and just post like some sort of bearish pattern here, calling for a breakdown, just a sort of like a top triangle here. But I'm not going to do that because that's not what again the trend lines might line up that way. And I could do that. I looked at it. It's there, but that's not the bias right now. That's quite literally the opposite of where the market's at. There's just rotation going on right now, and again, we're not mind readers. We don't know, for instance, when everyone else is going to feel the same way and when price is going to move the same way. And so again, it's the average. It seems to paint a different story, that it's only 2.5%. And if you look at the Dow, this is probably a better example of this, is that the Dow is only 2%, less than 2% away from its all-time high. So again, if you're in a long position, who cares, right? But again, it's the individual tickers. You can be getting hurt. Absolutely. You can be getting hurt. And this is, again, where you need to put some very important rules, or you don't even need to call them rules because we break rules all the time around here. Some principles about trading, which is usually, if you're trying to take these new risky trades, you need to be stopped out every time they don't work, right? You're going to get stopped out a lot. And this is, again, where that financial part, that consistency part, those that have been doing this for a longer time, that have experience, are going to do well because you can consistently make those trades and be disciplined, and to realize, okay, didn't work this time. let me do it again. We're not going to bet against it. We're not going to bet against Apple, right? Look at the Apple trade. We talked about it over here. Took this trade. Wow, we made a nice gain. We talked about we're not going to take profit. We'll have to get stopped out, or it needs to go to all-time high. Okay, here we are. Yesterday, we had to get out of that trade. Get stopped out, right? Are we going to not take this trade again? Nope. Wherever the low comes in, or wherever that sort of pivot point comes, wherever we see that tightening come, and that equilibrium is now heading to the upside, we're going to go take that trade again. Why? Because we're not going to bet against it right now. It doesn't make sense. Again, it may take months. It might take months. Whatever it's going to take for it to there's already an understanding in the market based on sort of when we come down to these lows. Think about that 4% day on the NASDAQ. Yes, every time you take that trade and it's come back down, it's sort of a slap in the face, because it seems like you're getting this like rally out of the low, right? Yeah, it's going to happen, right? It's going to happen. And it's the ones that can stay disciplined and be consistent that can sort of afford, I kind of made a comment, that can afford that pain of the risk. Again, we pay for the risk, for the reward in the future. Why? Because have you seen some of the fucking trades around here? When you're buying on those lows and then you go and capture 10, 20% on the underlying, you're talking hundreds of percent on the options, right? What's our downside on trying to take those trades? Very minimal. It's very minimal with a stop at the entry point, right? It doesn't take anything other than some fucking short-term pain, right? Some of that, oh man, some of the feeling, right? The feeling doesn't feel good, and then some of that financial loss of paying for the risk, which again should not be that whole premium. That means you're doing something wrong. You should be getting stopped out for a minimal sort of loss, which shouldn't, in all fairness, it shouldn't be more than the spread. Shouldn't be more than the spread that you're losing on getting stopped out, right? At sometimes you just have to, you go to the bid, right? You just go to the bid and get out. No one should be trading anything that they can't afford the spread. That's usually a good way to look at it. So again, when we're trying to take low trades, that's that mentality. Now, the reality is that some of you can't afford risk, and some of you, when recently this last week or so, coming from the end of last week, when we've sort of kicked up the heat and aggressiveness on going towards everything. Again, it's very easy to see that the market's not working out in our favor at this moment, and to then discount the idea of equities going to the upside and being risk on. It's very important not to lose focus and to just continue with what our plans are until they no longer are going to be really the plan to use. If something else comes in motion, then we'll take that, right? At this moment, though, we need to continue to trade in the way that we are. And again, some of you that can't afford that need to sort of tone down the risk. Some of you need to take longer term trades. I already talked about it this week. I'm going to be posting some more weekly charts. Some of you that can't afford the daily sort of grind and this short term pain for the future gain, then you're going to need to, chill a little bit, right? You're going to need to chill, maybe buy some longer term, longer dated, maybe a little bit in the money a little bit, something that's not going to be affected in a short term sense. This is like that group of people that buy shares and what are they? They probably don't care about anything right now because, again, being from so close to the high, it's not the same scenario. Since we're betting on direction, it hurts a bit more, right? Because we need that. We need the direction to always be continuing, or else nothing's happening. And the only other option would be to short. We're not going short on almost any instance right now. A month ago we did. 2 months ago we did. Right now we can't. It's just not. Look at shorting GME, right? You barely broke even probably on that trade. There's too many factors that are sort of against that side of the trade. That's not to say that we haven't shorted some other things, right? When and shorted, there are some examples out there, but again, there's usually a very specific reason, and it depends. It's not a broad understanding. A broad understanding is that we're risk on equities, and you could sort of flow in and find those areas at different times. That's a very broad understanding that we can pinpoint strategies and condense that down to individual tickers that are pulling into supports that we're looking to buy on, right? Usually in situations of overselling, right? So, in terms of where we are, I'll make the comment that I made down here. This, again, let me put it to here. We bought we bought a lot on March 5th. And I talked about, remember this date here. If you don't remember, you can go back. This was a Friday. March 5th was a Friday. And we bought on this, and sort of the motto going into the end of the week on that Thursday was that it always feels like this. Over here, there was a lot of thoughts that the market was going to actually like really downturn, right? I'm talking like sort of doom scenario, right? This is when yields really started to hurt, and it seemed like we weren't actually going to be able to get out of that because of sort of the cycle the market was in and the way the flow was working. It seemed like we were actually going to get hurt here, and it felt bad. It always feels like this. Where we are right now, and how some of you feel, it always feels like this. You have to remember that. You trust me, those of you that haven't been doing it very long, you'll realize really fucking quick that it always feels like this. Some of you already know now because you've done it multiple times now. It always feels like the market's going to be, it's just over. The whole thing is done. The whole thing is over. Again, the market's been going up and trending for a real long time. Longer than any of us have been alive. That's for sure. Even the oldest in the group, the market's been trending to the upside, right? It's really important to remember that, and remember that these short-term, the short-term volatility is actually what gets us paid in the future. It's so important to realize that the volatility that we get here is actually paying our gain. Otherwise, we would never make money. If we didn't get this, think about it. If we didn't get this movement, we would never get paid. Think about how hard it is to trade on a trend. Some of you that had a really hard time buying on when the market just trending to the upside, we would be making such a minimal gain. At that point, it may not even be worth it. It'd be like buying treasuries, right? It would literally be like buying treasuries. Listen, treasuries, they got up, the 30-year got up over 2%. It was at like 2.5%, guys. You could have gave the government your money for 30 years and they would have paid you 2.5% a year. That's a pretty good deal. Pretty good deal for some of you. But that's not what we're going to do, right? That's not what we're going to do. And that's where also trying to, the thing to understand as well is that in a lot of situations where you're betting against the market, you're not making more than that 2.5%. You'd actually make more money you would make more money just buying actual T-bills. But there's a lot of situations where if you look at the actual math, if you have a long-term strategy that involves being a contrarian, you will make less than just buying fucking government bonds. That's it. So, again, it's this short-term volatility that leads to the gains that we see in the future. And this is where there is a divide between those that understand and enjoy this volatility. And that's why I always talk about, I want more volatility. And that's why I'm it's kind of a pain in the ass that the spot VIX is all fucked up because we're not calculating risk in the same way. That's obviously purposely being done. I think at the end of the day, you can just look at it as the Fed is actually keeping volatility down. The Fed, and this is not really a hot take, but you know what the reality is that the Fed is allowing the volatility in the bond market, in the treasury market, to grow and rise to protect the risky asset purchases in the equity market. All of those risky companies in the equity market, the Fed is protecting that volatility through the volatility in the bond market. That's the truth of it. That's the only reason why they're providing liquidity in the bond market is to protect the riskiness of the equity market. Why? Because you have pensions, you've got it's the biggest market in the world. $30 trillion market. It's more than that now. $30 trillion equity market. That's the underlying. That's the shares and the value of the companies. $30 trillion in the equity market. The treasury market is a $20 trillion market. The thing, though, is that volatility has been rising and rising and rising. The IVs are out of their mind. The Fed is allowing that to happen to keep the volatility in the equity market down. Look at the VIX. It's just down, 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 the more the Fed provides liquidity. That's what their goal is. That's literally what they want. We're not going to bet against that idea as the Fed keeps holding our hand, right? And it's really important to still remind everyone that the reason why we have this trend that we've had, this is all the money supply increasing. This is just money, money, money. 120 billion a month by the federal government spending money every month. Another 1.9 trillion dollar stimulus. Another $3 trillion coming in for spending. That's all coming in the future, right? More spending in the future. The Fed's going to keep providing support. The Fed, it's risky to believe that the Fed is omnipotent and that they're gonna protect every situation, but they're not gonna let this fail. They won't let it fail. There will be corrections, but that's when we make our money. We want the market correct. The thing with tech, you know what would be great is if we just rip the fucking Band-Aid off and just take this down 10%. But guess what? We're not. So every time it comes down in here and pivots, we have to take the trade. If it just came down 10% and just ripped it off immediately, as we have been seeing the market, then that would be a better situation. But as of now, we're not in that situation. And so every time it comes down and gives us a chance, we have to take the trade. Maybe not the first time, right? I talked about being careful over here. We're not going to take it. We're not going to take it. But over here, we've now sort of come into an area that, okay, it's not as risky as before. So not the first time, but the second time. It's the same thing, though, is that if the market comes down and comes back up, starts to rally back up, we're going to take the trade. There's nothing you can do. There's nothing I can do. There's nothing you can do. And there's nothing that anyone knows that's going to help in that situation. Hindsight capital can't save us, right? It's not. There's nothing you can do other than be disciplined and continue to take those trades when they're there, because that's the method. That's how you make money. That's how you make money. And the reality is that prices are going to appreciate in the future, and we're not going to bet against anything here. There's just nothing to bet against, right? So keep that in mind, because, you know, again, it is hard. It is painful in the short term. Yeah, I mean, depending on the money, it could really fucking suck. And then again, that's why when we have those opportunities to make those gains, and when you're in a position that's gaining, that's where managing that for the future is so important, right? If you're able to make that money in that moment, that will always protect you, right? And that's where having a good sort of a balanced portfolio that sort of holds your hand all the time so that you can make these plays that will give you the gains is important. And then again, if you're using sort of a method that I use, which is a little riskier, it's casting that wide net and trying to capture as many different things as possible. So even when there's a lot of things losing, those are not making you lose. That's your portfolio isn't the market, right? It's difficult. I'm excited for the end of the week here. If we look, let me bring it over. So again, futures are down about 0.5%. Russell's down a little bit more. Yields are still going down. The 10-year is now down below 1.6. This is probably going to be a bit of a problem, because when it comes back up above 1.6, the market's going to react. So keep that in mind, because Treasury yields have now been increasing. Now, it is possible for the number there on the 10-year to be a bit deflated, in that due to the auctions going smoothly this week so far. Again, we're wrapping up the short-term auctions. Due to those doing well so far, and again, the 10-year wasn't on the menu this week, but due to those doing well so far, it is possible for those yields to come back a little bit more, because there was volatility. Remember, the volatility was being priced, and the Fed is allowing more volatility in the Treasury market to protect the volatility in the equity market. Even though things seem fucking volatile out of their mind, they're not on paper, though, right? It is possible that the market realizes that and will not react to the yields increasing if they do. Yields keep coming back. Why is growth going down, right? This is, again, the whole dilemma of all of these price movements that make the markets reacting too much. And I called for over here at the start of this week that we're not going to react to the yields the same way we did before. We'll see if that hypothesis is true. Again, there's no evidence that says that that's going to be the case, other than that's where the market is, and that's how historically that's how we would react. Is that if something happens so many times, you sort of just price it in and get accustomed to it, right? That's something that I would say is a baseline now. Now yields are going down again. Then why isn't this shooting up? right? It's the same thing. It's not now. It's not reacting to the upside, which would mean that we're just not reacting at all, which might be a good thing. That would technically be a good thing. It might be maybe providing some evidence to that the hypothesis of no reaction to yields. We'll see. Think about the next 2 days, right? We have Thursday, Friday. Fridays have generally been a little bit greener, and people have been really willing to put risk on over the weekend. The problem right now is China. Again, Asia. The Asian markets are not great right now. Hang Seng was still down today. Now it showed some. I mean, you can't call this a pivot or anything. It could just be going on the way down. But it's just this is down. Needs to be taken into consideration. We don't know where any of this money is still. If we go take a look at the dollar is rising here, but it doesn't equal the amount of the money that we feel is leaving the market. The problem is that nothing is actually technically leaving the market. There is no technical outflow, and so again, we run into the same dilemma of where is the money. It's the same money that's been on the sidelines has been on the sidelines. We know there's a shit ton of cash out there that's been willing and ready to do something, and the longer they don't do anything, the longer they're looking at everything as an opportunity. We need to always be aware of that there's so much money on the derivative side that we don't see, right? That's constantly being bet on the market. I think it's probably important that coming into tomorrow, we sort of take into account how much is being put onto that side, especially the money that's leaving Asia. If we don't see it coming into the underlying or the dollar, I mean, what are they buying all the fucking treasuries? Like, it's not, then where is that money? Where is it going to be going? Is it in the derivative, or they're literally just waiting for this to come down into them? They're just waiting for their bids to get filled. Just bring it down more. I mean, it's just going to be a patient game. We're not going to we're going to keep trying to buy the lows, but I think at the end of the day, you have to imagine that money is going to be entering, and I've said it multiple times in the last week or so. The only thing that you can technically buy right now is the fucking U.S. equity market. There is nothing else in the world that screams buy me more than the U.S. equity market, even though we're really close to highs. There's some opportunities, though, these are the meme of generational buy opportunity. Look at some of these. Look at some of the pricing. Apple, like 20% down. These type of areas that are just no-brainers, right? They're going to get scooped up. That's going to happen. I would have to imagine that's going to happen. The other thing is that some of these orders, if there is a lot of money that's going to enter, we're not going to see it. You're not going to see it. It's going to be in dark pools. No, your favorite Twitter dark pool screener fucking people are not going to see the orders. That's not how that's literally the exact opposite of how a dark pool is supposed to work. No, you can't see the orders in there. I'm sorry, but any of those services that say that you can see in them are fucking fraudulent, or it's not really a dark pool. It's just an order flow of the high frequency trading firms that are providing liquidity and actually market making for us. That's what they're providing. And so again, you're not going to be able to see those big block orders. Yes, you can see order flow. That's all those services are providing. So it's possible they're in dark pools getting ready, and that's not why I'm saying we should buy things. You know why I'm saying we should buy things, but in terms of finding the money, it's been very difficult to find the money so far. It's going to continue to be difficult. That's just the reality. We haven't seen any correlation with the dollar in terms of flows that we saw earlier, which was so much easier. It's never easy, but it was so much easier having the dollar on our side, reacting more one-to-one with the market, right? Could that be them pamping the dollar, says Brian? So again, the dollar here, it's really important to remember that the dollar, the money supply keeps increasing, which is decreasing the value of the dollar. The Dixie here, this is the dollar against the other currencies in the world. And so it's counterintuitive because technically the dollar is losing value because of the money supply increasing still. This is inflation expectations and yields increasing that have caused the dollar to increase. It's not so much that people are using the dollar as a safe haven. No one is no one is really going into the dollar for a safe haven right now. That's sort of the opposite of what you would do, because right now, if you want to have a safe haven, you would just go buy treasuries, right? They're offering yields, and you just go buy treasuries. You get filled immediately. So this here is again due to sort of the break evens increasing in the expectation of inflation in the market, in the economy, that's causing the dollar to appreciate. There's going to be a problem if we think the opposite, that if the dollar keeps increasing, that's somehow risk off for markets, because it's not. It's not at all. The dollar can increase to 100, and we can be risk on in the market. And again, you can just go back and look through history of the dollar increasing. What about over here in 2018, right? What about this increasing here? Did the market all of it? Look at that. Looks like the trend in the market, which is more volatility, right? What about back in here? Did we not increase in the market through all of this year, right? What about from the financial crisis, right? There's a lot of different ways to look at it. The dollar is not always correlated, and it doesn't have to be, right? It doesn't have to be. What we do have for correlation is the Fed starting to pump liquidity into the market and money supply increasing directly tied to the dollar. It doesn't get any more obvious than some of this price action, right? No one's converting the dollar, and again, even if the dollar keeps increasing, it doesn't mean the market can't be risk on, right? No one's going, oh yeah, let me go buy the thing that's going to go down in a year. when everyone's inflation goes up, and the dollar is not worth as much, right? It's just in relation to the product, in relation to things that you can buy with the dollar has a higher value. That's all it's saying right now, right? The one way you could do that is you could look at the flows and look at sort of the volume of currency trading. That would probably give an answer to that question, but we don't need to look at that, because it's already implied, right? And also with Hong Kong being down, they're literally the currency. Everyone trades currencies on the Hong Kong exchange. That's literally the spot. You want to get a swap done, you do it through Hong Kong, and it's the currency market is ridiculous. You're talking about trillions of dollars every day, not specifically dollars, but currency, trillions of dollars worth of currencies. All right, let's see what we get here. We had some interesting things. I saw like GRWG up a lot. Again, we're doing well on that. We're doing very well on that chart. Obviously, there was some news yesterday. It sold some of that. That's a one. What was it, like 2 hours of price action from the news? Again, that doesn't affect the overall. I like that a lot. UMC's up 2.5%. That got beat up. Rad's down a lot from some news. I talked about possible. we might take some possibilities there. I don't like it, but sort of in a risky mood. Some of those retail stores that got beat up, and also some of the things like Viacom and everything that got beat up as well. The timing of those is never going to be perfect. If there's support on any stocks that kind of lost a lot like that very quickly, like I've said about tech, I would just rip the fucking Band-Aid off. If we could just lose 20% right now, I would go buy it tomorrow at open, right? The problem is we're not going to get that. Some of these tickers did that though, right? Some of these tickers lost 20% instantly. Those are the kind of situations that if I have support down there, all of a sudden I'm going, well, shit, man, that's 20% that is probably going to come back. So let me buy some of that. Not at that moment, but maybe the next day it opened, maybe the day after, week after. Absolutely. It'd be fun to see what happens to GME today as well. Obviously, it lost so much yesterday. It's gonna rebound a little bit, but it'll be interesting to see where that stops and how much that loses today. It might be instant. We'll see. Here's a little bit of bid. We'll see. Again, it has a lot to lose, so it has a lot to lose. It's up 1,000% still year to date, which is a scary number. Scary number. I mean, they 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 should just obviously raise capital until the price hits zero. If they do anything else besides raise capital until the price of the stock hits zero, then they're not doing it right. That's it. I know they said they're going to raise capital, but uh, they need to, first of all, you have to apply to change. I think they only can raise what, like I think I saw only like a billion or 2 billion or something that they had allocated. They need to go apply for getting that shit sent to infinity and just raise capital to zero, price to zero. That's the way to do it. Funny that RX is going up right now in relation. Eton coming back. That's a very interesting order. Let me look at the book. Funny. Let's see what we get. Let's see what we get. In turn, see, I mean, you just have to buy these things. There's nothing you can do, and we're not gonna play the game. Where if you can afford it, then taking the risk and taking the beating now is always worth it. Just always worth it. And even though we make some riskier short-term trades, like we try to swing and then try to push that to maybe a few days to a couple weeks if we can, or more, and then we take another trade transitioning, right? That's because we're trying to maximize that gain that comes from that risk, right? That's otherwise you're just buying shares or something, and you're gaining the underlying. But we know, of course, we're trying to. We don't get time for that. We're either gonna. We're like a rocket, literally. We're gonna either crash and burn, and drag the rocket across the ground for a couple weeks, or actually leave the fucking planet. Right now, we're kind of in space doing circles around the fucking moon, right? Whipping around. Everything that's coming off the low comes down to timing with tomorrow and the weekend. But I think, again, we need to look further than that. You have to make decisions looking further than that. So everything that I've talked about in the last couple weeks here of risk on equities, we have to be looking further than Monday. We have to be looking further than the week after that. It's very important to keep doing that because, I mean, otherwise we're just going to be sitting here waiting for however long it takes and then miss a lot of the gain anyway. I do like the mega caps move so far. Again, if you've been in Facebook, we have not been hurt much at all. Microsoft has been doing well with this trend line. Maybe I should switch to the other layout. We don't have trend lines on this one. Switch over. Loading 15,500 drawings. Rip. There it goes. Okay, yeah. So the cues, I mean, again, how much and how quickly is a question. I think when you look, so Microsoft here, right, coming into the trend line, if you look at the mega caps, this is where you get liquidity. You want to put orders on quick, you go to mega caps, which is, been doing Apple. So again, we're literally taking this. I mean, I'm taking the same trades as before. We're repeating our action. It's not that, we broke even last time. I mean, maybe you could have squeezed a profit out of there, but no one's guessing tops here. Then, well, I got my 3%. I'm out of here. That's not what we do. But we take the same trade, right? So if you look at mega caps getting their liquidity right now, looks very good. That even looks good. Facebook, for instance, right, coming out of this support, it's really important to see that. I think that looks great. Looks great. Again, this trade, I mean, it's funny that this trade has been very good. Has been very good. It's been one of the stronger, better moving. This would be better movement in a short-term volatility sense on Facebook. So we do like that. Brian says forward support. Yeah. Yep. Again, I mean, you're gonna have to pay. You're gonna have to pay the risk here. You'll have to pay the risk. Like I'm saying you'll have to pay a price here in some way if you're trying to take the trade. But your reward is up here. So if you're willing to buy up here, are you not willing to buy down here? That's a good question. BJ is kind of a strange chart now, right? BJ is a little strange. It is on the support here. You get this trend line though, and the price movement over here has been a little wonky. And the thing to remember is like retail stores and what's going on right now. This is probably just gaining because you have some retail stores that are down. It's like a mixed bag over there. So I'm not sure what to think immediately about this side of things. I do like the movement in that you sort of came off support, confirmed this support. Could be very good again. And again, obviously I'm bullish on it. You can have a fucking chart for it. But yep, right on support. We'll see again the interaction with the trend line here. You could definitely get some interaction, and this is likely a tomorrow trade. Some of these trades, like this here, right? Rad lost. This is 16% here. Now, this part here, right? This is quite the interesting trade that we were able to grab, right? It's this with WBA, a lot of the retail stores, is really an interesting sort of thing. And now look, we're right back to where we were, right? So retail stores as a whole, you could probably say have a lot of points to gain, but is it more like regain? I mean, this is kind of like that spot, right? So we talked about it yesterday that we're going to try to use RAD to artificially. Now the problem is that there's an ass load of contracts, and the problem now is that there's a bunch of being bag held. I mean, obviously none of us would ever hold options through this move, but it's not that like the contracts cease to exist; they still exist. So that's a lot of contracts that if you get back up here is going to cause this to actually fucking skyrocket, which is why I talked about the same thing can be done. It's just the price is going to be completely different. The WBA play, we paid fucking pennies for, right? Pennies on the dollar. I mean, obviously it was like the average was like $40, but 40 cents. This is a little different over here. A little different over here. So it's not, you can't get the quantity the same way to take advantage of that elasticity, right? Not the same. Not the same. We'll see. Like retail stores. Q's coming. Q's coming. Again, Tesla, I was like, oh yeah, obviously it's gonna go to the upside. And of course, that didn't play. We sold through during lunch. We were interacting with this trend line earlier in the day, but as soon as we lost volume, this chart has needed volume. Again, buying this, I mean, I prefer the other ones over here. If this comes back into here, then I'll make the same play. Down here is too much for me. I can't do that. Too much. But the other mega caps, I'm all for. All for Apple. All for it. And then again, guys, it's so important to remember the value side is so important not to. This trade over here, it's really easy to look at this and be like, oh, Jesus fucking Christ, that's scary over there. Except it's in relation, it's so important to remember where it is to the rest of the indices. DLTR. Um, it's very broad, very broadening. I don't think there's any trade there at all. Gonna have to wait a little bit. I think what you wait for is some of these highs. If it was a little earlier, then maybe you could think about the swing up. So this sort of high up in here, also the supply in here. There's not really a supply, but you're stuck in here. Yeah, something in here. I would say you need price to swing back down. Again, we're bullish on retail stores. This is obviously a little bit more bullish in the short term comparatively. I had the same move as the others, but it looks fine over here. But it's got a lot of supply up there. And what's it going to take for that to break the supply when it hasn't broken it before? Right. That would be the question. You would need movement that would be able to break any of this. This movement here didn't break. This movement here didn't break. This movement here still hasn't broke. That's a tough trade. It's in a really, such a weird spot comparatively to the rest of the market. It's a funny candle. Double bottoms. I told you I like Chris, guys. Told you I like Chris. Where's Eric? Where's Eric? Nowhere near Chris, that's for sure. Eric's actually going too. I told you the tickers with names. Makita says he's more of an Eric guy himself. Looking very good, Chris. UMC continuing. Very nice. Let's see what the relation is here. Semiconductors coming back. INTC here. Okay, that's a Friday trade out of my mind for sure. Now, I have like some long exposure to this through the Dow play, but for a short-term trade, that's like it doesn't get much better than that. Does that not look like when we talk about the market like on even 5-minute candles? Oh yeah, you get the first 5-minute candle pullback, then you get a tightening in equilibrium, and then it goes up. That's maybe you do take it today and you can't take it tomorrow. Maybe that's actually. Now I don't like. It's not like I like Intel over like AMD even for product wise, but we don't trade fundamentally here, right? Because look at, yeah, this is fundamentally the better. Yeah, AMD is easily the better. Easily the better fundamental side, right? Product wise, everything else. But look at the chart, right? That's now I have said that I'm buying it down here at the low end of the range because again, I expected if this is the low, I don't expect it to come down. No one's going to short it past this. No one's shorting it past this. You'd have to be out of your mind. The market won't do it. The market won't do it. That's the thing. Because as soon as you do that, you create a whole new scenario if you're going to let it break this level here. Whole new scenario if you let this thing break down. Where's it going to go? Right? Where are we going? And what does that mean for the entire market if that's happening? Right? I'm a buyer there. I love that spot. I'm a big fan of it. We didn't get that involved up here. We tried to take the trade there. We were involved over here, remember, and we took this trade over here. If you remember, this is very much like the price movement back here. It was very hard to trade in this area, but we actually took the trade. I don't think we have it anywhere because it was on the other Discord, but we took these trades in here, and we took it multiple times on this trade to try to make it work. This might be a good example, actually, of when we were in this sort of choppy mess after a big rally and being able to take those trades multiple times, and then we get paid for it. That might be a good thing to go look back on and build some confidence for yourself to go buy on lows, because then you get fucking paid for it. You get paid for it. And so you don't know when, you just know that's sort of the market sentiment, and that's the idea behind the market and how markets trade, right? So the same thing, like with the Qs, right? I don't really want to use this trade here because that's kind of different, but maybe some of the choppiness of any of the market. Think about how the market continues and try to get some confidence out of it because again, it sucks losing confidence and losing money sucks and I hate losing money. But I'm not gonna let it stop me from making more money, that's for sure. Need to keep it going. Keep the spirit high. Always TK, are we buying this here? I really want to. I kind of want to wait for Friday for some of these, but I mean, it's not like you're gonna miss it. Again, here's the thing as well. Those of you that have a different sort of view of risk, it's not like you need to get in right this second. It's not like you're gonna miss it. You're not gonna miss it. It's not gonna gap up 10% tomorrow. Whatever you're trying to trade, right? It's not gonna happen. So it's okay to be patient. It's okay to be patient. If you can afford the risk, then that's what you fucking do. You try to get everything. You can squeeze your way out of everything, right? Some trades you're just gonna need to wait for. Some of you need to wait. And it's okay to, because you're not gonna miss the whole move, right? Let's say you didn't buy here on March 5th. You could have waited a few days and you could have still bought, right? It's okay. It's okay to miss. Because there's always a point at which your risk reward is the best for you. Some of us were ready to take the risk all the time. Nothing screaming anything yet. But you know what the market is screaming is just a holding state. And it's against the market movement so far that we've seen this week. Because it's another week where we actually start off bullish. Right? We start off bullish the week. And even Tuesday, the day after Monday's opening high and had a really great day. Tuesday was also a very good day for trading, like for trading, and it felt very good. Yesterday was very good as well. We talked about, again, lunch will happen where you pull volume out of the market, and in this instance, it pulled the demand out, which now we know about for lunch right now. We'll have to see. I'll just say. But it's not reacting in the same way, that in the sense that, again, if you're selling, you don't just stop. You don't go, oh, let me sell some of this and then wait to see if I should sell more. That's what you do when you're buying. Selling does not work that way, right? You and me ready to go down, huh? You could. So much is around that break even area, which again, the idea of betting on volatility to come and betting on like that the convexity trade is that price is just at a point and then it's going to move up or down with speed. Again, we're sort of at this spot where we're back to some of these break even areas. Price is not moving away from its start. It's going to, though. We know it's going to. So I mean, when things aren't moving very much at the open, it's important to remember that, okay, this is actually going to change. Things are going to get moving. Things are going to get moving here. You can just bet on speed. up the volatility on this chart. Pepsi trade has turned out very well so far. And the pumping, the volatility that's been happening on these days has really helped the contract. So if you're, again, I mean, there's almost anything you bought here, you're still in. I haven't seen any contracts that have actually lost anything because, again, the volatility, look at these candles in here. This volatility during the days has helped so much on the IV side, continuing to give you movement, all you need. I still expect this to come up here to very quickly, based on the chart and the way that moves, which is why I talked a lot about this coming this week, because this whole side of transportation and this distribution thing and the food beverage side angle is just, I don't know, a little bit standout. Banks are, I mean, it's so funny. Those, again, this is a good example. If you have a long-term hold on banks, what are you doing with this? You're going to get out of this position here? I'm talking like an institution or something. Like, no one's looking at this and saying that this is bearish. But Don, I could go down here. Maybe. You're right. You're right. Nothing really on the UWG is now down. XOM 3%. The crude side has made things interesting again. So here's crude. The selling here, obviously affecting energy, oil again. Now, this recent volatility that's being caused by all kinds of things, again, we need to be very careful on, because nobody knows how news is going to play out or anything like that. So there's not really anything you can do. That means you have to be a little bit more careful of the present the present term, because the thing you don't want to do is buy and then hold because you think something's going to happen and then get more and more hurt before getting out of that. When there's volatility that we can't understand, and that's not sort of like there's other things going on that we just can't do anything. We're not going to, so again, if you like entered, I'm going to show you, if you entered here, then you're getting stopped out there. There's no such thing as, no, depending on where you entered, wherever your stop is where your stop is. If it starts to come back up, then you'll just re-enter. But again, there's too many things happening on the crude side that are not related to like the actual future value of it. Oops. You got fucking chips stuck in the Suez Canal. You've got you're already entering a consolidation, and then all of a sudden your long positions don't make sense anymore because you have this. You might have more chances to buy a little bit lower. If everyone has a chance to buy lower, then everyone waits. So again, awkward timing to go take a trade there, and then that shit happens. But it's a really silly thing that these things will happen, where you make a trade, like you buy energy that's linked to oil, and then all of a sudden there's billions and billions of dollars being lost due to a ship stuck in a canal. Like, it fucking happens. I mean, what are you going to do? I mean, that is a tail risk of buying energy, sure. Is that, well, what if Texas happens, right? Texas with their storm. What if a canal gets stuck? What if there's a storm somewhere? Or what if there's a war in the Middle East, right? I mean, ISIS could, when they took over the oil fields, that had an effect. Like, these type of things they are tail risks, but it's always awkward when it happens at the moment, of course. I mean, what are you going to do? Just, stocks are too risky. That's why they should be avoided, right? Avoid stocks. Avoid stocks. T-Trader says just go around Africa. Come on, man. Yeah, why not? Why don't they just they're right there. Offload the shit onto the shore and then bring it to the other side. Or just fucking take the shit off the boat and move the damn boat already. Holy mackerel. Unbelievable. What year is it? What year is it? Now, I'm bullish on that, so I am bullish on energy and clean energy. XRT is weird because of GME still. That's the thing. So I wouldn't touch that. I would just trade the individual companies, like what we were looking at. You point out BJ works. Red, if we can do something. Again, the other retail stores that we like. It's definitely weird because of GameStop. I mean, is this at this point? You don't know if this is going up or down over here. I mean, who fucking knows? It could go to 400 right now. Who knows? It could go to 0 right now. There is no such thing of knowing. So with the earnings, that was a different situation because everyone was betting for something to happen, so it's going to happen. I think XRT is 257% of GameStop is XRT, which doesn't translate to more in XRT or something, but it's just due to them. And my favorite thing about WSB is they don't understand what it means to have like more than 100% of something. So it's like, wow, XRT owns 257%, and this hedge fund owns 80%. How do these numbers add up? And we own 17%. How does that make sense? Not understanding that you can buy things at different prices, and things translate to different prices. And for instance, an ETF is trying to benchmark, right? Oh, I'm trying to benchmark with the rest of my holdings. So if the price is fucking changing every damn day, 50% every day, you're gonna have to change up the way that I'm in this position. Might have to pay a different price. I think XRT's in for like 200 or something. That's what they're at. I think they're in for 200 is the average. So again, since they're in for 200, that's how many percent more? 50% more. So they're in for 50% more than the price is currently, which is why they have a 257% holding of GME. But yeah, apparently the memers think that's somehow illegal to own more. That's because they fucking paid more, my dude. That's all it means. That's literally all it means. They just bought in a higher price. What? That's illegal. That's fucking illegal. SEC, do your job. SEC, do your job. I'm losing money. Fucking do your job. Okay? Obviously, my strategy that we invented this year of apes strong together and diamond hands is legit, and we should be getting paid for it. The fact that the stock is not going up in price is illegal. Stop the count. Stop the vote. That's illegal. It was Hillary all along. Unbelievable. They're going to be praising themselves today and say, I told you. When do we take this trade again? I don't know. It's probably going to do this. You need to see the presence again of market makers in here, I would say. Okay, Dow looking very good. I like the movement here. I like the movement there. Again, some of this selling, the energy side is really a big part of the Dow. As you don't know the benchmark, and the average is kind of shit. Yeah, GE, BGI, right? Apple getting paid from the low down here. If you're able to get from the open, the low, this is not possible. No one bought down here. Impossible. Sorry. On options, impossible. You didn't get that low. Option chart looks more like this from the bodied. See, we got this support again. Obviously, and we have a horizontal support down here as well. So let's go. Risk on equities. Come on. Now, AMC, I do like more. I've talked about this. AMC, I do like more. And I think there's actually better chances with this. And then the triple BY. There's just better chances here to not lose money. That's what I mean. The risk you're paying is completely different. You're not paying some of the contracts in there are like hundreds of dollars to go buy GameStop calls, right? Hundreds of dollars. So what's $100 call? Probably a little bit more than most of you can afford, and they can afford. So wait, they times options by 100? Oh, I thought they were literally only 10 cents. Oh, that's $10? Fuck. Here we go again. Let's go. Pamp. Pamp. Crash. Pamp. Doesn't matter if you're pamping or crashing every day, right? As long as you're buying on the pamp day. Or, I mean, I guess if you bought on the crash day, too. But, Don, we're only up 20 basis points on the NASDAQ. What do you mean? Okay. How much? This candle yesterday was just, some of these are bad. Remember, some of this is overselling. I talked about this with the Peloton trade, not to like make myself feel better about this coming down after I entered it or something. It's just overselling, right? It's just overselling. Look, overselling. It's the spreads are moving too fast, right? It's just too fast, which is what happens when you oversell. Not controlled selling. That's fucking falling. You're not climbing down stairs. You're not going down. You're jumping off the building here, right? That's a free fall. Free falling. Interesting spot. Let's go. Chris. 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 Let's go. Support buys. Support buys. Break the rules and follow the rules at the same time. That's the only way. For every rule I break, I follow 2 rules. The 2 for 1. But I followed 2 of the rules when I broke the 1. So I bought it. No, it's not supposed to work like that. Alright. Fucking go. Make back some of these stop out losses. What is that going to? 100? Plus 100? Oh boy, here we go again. Here we go again. Oh, the market's not gonna crash. Better buy travel. Fucking insane. Again, you don't know when, and there's you just have to. There's nothing. Again, anyone that hindsight capital and all the other bullshit, right? We're just trying to manage risk, right? We're just trying to manage risk. You're not always gonna bottom tick. You're not always gonna time the top. It's rough around the edges, right? You're gonna have to pay the price. Not fucking easy. Not easy. Suez Canal remains choked as elite team tackles stuck ship. Oh god, we get the number finally. $9.6 billion a day is how much is being lost. I mean, that's just what's on the ships that can't get through. 9.6 billion a day. So that plus whatever. I mean, again, that's going to then cause like a some sort of exposure after that of anything that doesn't get delivered. So there's going to be losses on businesses. It's such a weird thing to think about, but you know, if you don't have your products for a few days, you're kind of fucked. Sorry guys, we ran out of that. I think they said there's just about everything. Just about everything on the ships, so crazy how big those fucking things are too. What is what's going on over here? I don't see anything. Okay. Bitcoin looking great. You can now buy a Tesla with Bitcoin, which sounds like a pretty bad deal, but your car could be worth a lot more in the future based on what you pay for it with Bitcoin. That's for sure. Or it could be worth a lot less. You could have got a discount. But either way, you still paid a certain amount for the Bitcoin, so it doesn't matter, right? Literally doesn't matter. Other than the fact that, yeah, you could be losing some value or gaining value. You never know. Oh. Well, I don't know if you're going to get below 200 today, Makiza's on IWM. That would be pretty insane. Oh, he's not in here anymore. Makiza said the question today is whether IWM goes to 200. That would be pretty wild to lose 5.5%. That would be wild. I think that would be a market crash, probably. That'd probably be a market crash. Which, I mean, some of you already think this is a crash anyway, so. I guess it's the same fucking thing. I mean, it's literally the same thing, I guess, right? Crash? It depends how you look at it, for sure. Could be crashing. Your portfolio could be crashing. It could be happening when uh the market's going up and people's accounts are crashing, right? Is the market going up or down right now? Basically, 99% of institutions, investors, Wall Street would say it's going up. Like it's trending up, right? But right now, I look at my P&L. You don't like any of my ideas, Dawn. You're so mean. Oh, listen, man. I pay you to like my ideas. Okay, that's not very nice of you. I don't come in here to be criticized. I only trade plug, says C Trader. Post a chart. Um, interesting. Interesting. I wouldn't advise it. Maybe if it climbs back up into here, but I mean, at that point, if you think it's gonna come up there, you might as well buy it now, right? Why wait? That's a tough spot. That's a pretty tough spot. That's a pretty tough spot. Little bit too much volatility for my taste. I'm risky, but not that risky. Your risk portfolio is up there, though. Ooh, do it. There you. Don't make fun of my trade. I've been buying plug all the way down. Well, you just don't see it the way I see it. Zoom is cheap again. Buying down, I haven't sold since the top. That's a better way to put it. That is a better way to put it, actually. No, I'm not a buyer, I'm a holder. Is that what Wall Street analysts mean by buy and hold? No, I mean like I'm literally holding it from the top. I'm a long-term investor. Buying? What's that? No, I'm just holding. That's what that's my favorite thing about the GameStop thing is it's like, no, we're actually holding. We're holders. Like, wait a second. So if you guys are just holding, then how the fuck is the price gonna go up? What do you mean? How is the price gonna go up? What? Aren't you losing value if it's just you're just holding? Don't things deteriorate? Like just in general? No? Wait, what? No, I'm holding. What are you talking about? Not a loss until you sell it, am I right? Just on paper. And that paper might be removed someday and we're going to convert to Bitcoin. So these dollars mean literally nothing. These dollars mean literally nothing to me. Okay? Because I'm going to be able to buy games at GameStop online with Bitcoin. With my Tesla. In an airplane. On a cruise ship. Oh, and boys, by the way, here's some advice for you. Never tell a woman that you're a traitor. They just walk away. I promise. It maybe 2 years ago, like a year and a half ago, you said you were a traitor. Swooning, swoon, swoon them. Wow, you're a traitor. Wow. Nowadays, dude, you tell anyone you're a traitor, they fucking can't run away fast enough. They can't run away fast enough. This whole new day trade craze and Robin Hood bullshit, all of them, they must hear that so much now. All these unemployed fucking, I mean, all of us, obviously, right? I was on, so I was on the Peloton this morning. I'm on the Peloton this morning. I'm talking. I told you, new lady friend. I'm on there, and I slew down and started talking to her. She's like, "Oh, hey, what are you doing?" She's like, "Nice to see you again." She's like, "What do you do?" I'm like, "Oh, I'm a trader." She got off that fucking bike so quick, dude. I'm probably never gonna see her again. Probably gonna move out. Never tell anyone you're a trader now. I'm telling you. A year and a half ago, 2 years ago, that shit was great. It was the easiest thing in the world to just tell someone you're a trader. Like, wow, that's pretty impressive. Nope, no more. Like, yeah, I trade on Robinhood, but I have really strong fingers from all my mobile trading. They're greasy, but they're strong. Yep. Lessons. Lesson to be. And now, first of all, guys, I haven't talked to anyone in a long time because of COVID, like in person, right? I haven't had many sit down conversations or like indoor conversations. I've gone, when you go out, you're just with your normal, you're with your friends. You can't meet anyone new in New York. You're just with your friends and that's it. One of my first real, attempts at, trying to talk to a stranger without masks on, by the way. We were pretty far away from each other. That didn't work. Unfortunate. You're a trader? Oh, Jesus. You must not have a job. You must be broke and unemployed. Yeah, get a load of this goon, exactly. What are you? I'm a day trader. I trade on Robinhood. I'm a GameStop owner. I own GameStop. I'm actually a GameStop owner. And I actually own a lot more value than others because I bought at 400. So my value of my shares are actually a lot more than most people, honestly. Let me tell you. Yeah, listen, I actually have a lot of friends. Yeah, I actually have a lot of friends. Do you know what Discord is? Yeah, I have a lot that yeah, they're yeah, do you know what Discord is? Yeah, I have a lot on there. I know a lot of people on there. Fucking COVID, man. Stuck indoors. I hang out with my friends all the time. Online in virtual reality. What have you been up to? Oh, just hanging out with my friends online. Haven't gone outside in a few years. uh I'm going out this weekend, boys. We're doing it. We're doubling the mask up. We're going to the nearest bar downstairs. We're doing it. We're going and we're getting a glass of wine and staying 12 feet apart. Last on the list for vaccines, but you know what? Okay. Nothing here. Neo AMC. Cool. TLTR. Crude's down 3. Europe's down percent. How much do we want to... I think the mega cap angle's fine. Mega caps are fine to push to tomorrow, so they were fine entries at open. I think a lot is going to be waiting till tomorrow, and I'm not worried about missing a percent or two. We've already lost a percent or two, so I'm not worried about missing a percent or two to the upside. I'm going to try to capture at lows where I can. But some of these tickers, it's not the same as like here on like Apple buying this here is not the same as like some of these they're like truly just trending down, and we don't need to buy those lows because we can miss a percent on that. It's down enough that it's not like, oh man, too bad I didn't bottom tick this. So again, you don't need to force anything. There's some things that I talk about, like we're gonna make this fucking happen or get stopped out. That's like in these areas with Apple, not something like something else we want to buy. What's something else we want to buy? Like Viacom. I'm okay with missing this 4.5%. I'm okay with missing 4.5% here on Viacom. I'm okay with it, honestly. I'm completely fine with it because it's down like 30%. So I'm okay with missing a percent or two, for sure. If you understand this. No, I gotta get it right now, man. Because, listen, a percent means a lot to me. So, Cupin, see ya. VNet, pain in the ass, right? VNet, pain in the ass. Oh yeah, things are great. And then yesterday with all of these, all of the tickers in this sector, right? Viacom, VNet, the disk, all of them. Now, I like this a lot more. This is much better than the others. But it's still down there. Tomorrow, though, oof. I like that. Ford, GM, nice support buys. GM, a little bit easier. Just, I mean, obviously. Not that it's easy. Obviously not. But difficulty-wise, probably a little bit easier to make that trade. Certainly easier than this trade. Right? That's just, look where they are. Here's NIO. Here's Tesla. And then here's GM. Oh, okay, yeah, that's fucking much easier, right? Much easier. Here's Ford, a little bit in between. It's a little harder because the angle. A little bit more angled. Still, risk for the reward makes sense. Teacher says, come to Florida Max for all. Yeah, I mean, I'm still looking in Florida. My problem is that I have to live in Florida, which, you know, that's the problem with moving to Florida. Like getting a condo for 184 days to, obviously not to get tax exempt, but it's still 184 days of living in Florida that I have to do. The more I look and the more trouble I'm having finding a place, still reminds me why I'm probably just gonna pay the price to live here. No, I don't mean like I'm already fucking paid. I just mean, you know, the extra tax. Not a shill. I will pay. If anything, the few months ago, I was looking at apartments in Vegas. I think I was showing you guys. That's still on the cards. Just not exactly sure still. Right? Not sure. COVID is definitely shrinking our brains. And apparently, Pollution is shrinking our penises. I read that. That seems like a really good way to get everyone on board for renewable energy. I love it. Let's do it. I mean, they don't listen to scientists already, so what are they gonna? I mean, it's a good tactic, but let's be honest, they're not gonna believe them. You would have to have some hog somewhere tell you that to believe it. One of the flat Earth hogs. Do you know our penises are getting smaller, honey? God damn it! It's that goddamn. It's them goddamn wind farms and solar shrinking our damn penises. We never had clean energy before. My dick was growing. Now it's getting smaller. It's the wind farms and solar. It's them goddamn Teslas and 5G waves shrinking my penis, not the goddamn clean coal I've had forever. I used to be big. Now I'm old and small. I hate 5G. That's just the life of a hog, you know? Um, Semis are holding very well. All about this move. I'm all about this move. Tough trade, but I'm all about it. All about it. BRKB, I've talked about this a lot. I'm all about it. This is it's such a this one especially. Even if you've got in earlier and just keep holding it, this is one of those ones that just sneaky and it's so hard to get hurt on this trade that it makes it worthwhile to put some money there. Right? Who the fuck is getting hurt on this trade? Nobody. Nobody's getting hurt on this trade. So the reward is not as great because there's not as much risk involved, but just making money is better than losing it and not doing anything. So is it going to go up? I have no idea. No clue. But I know I'm not going to lose it. So, and I know I'm going to make at least more than what I would make for getting treasuries, right? So if I'm going to make more than I could make from buying a bond, then I'm all for it. Come on, Warren Buffett, give me money. I thought you were the best investor in the world. $100 billion worth, more like 100 billion years old. Am I right? All right, I'm sorry. I'm done. I'm done. Done. I'm done. We're having a lot of waiting till tomorrow, though, unless you bought everything right now. I'm trying to. That's just what we do. What we do. We're right back to the same low as before, and we're still holding the same low as before. Those things are connected. Might take some time. Needs you need to not cut your legs off, that's for sure. Nice one. Nice meme. Love Forrest Gump. One of my favorites. Easily. Back when I used to watch TV, every time that movie was on, you gotta watch it. Forrest Gump comes on TV. Oh, looks like I'm gonna be here for the next 2 hours. UYH. Where is where is I was trying to get the new sectors because we talked about healthcare every single day, and it's specifically this side of healthcare. It's not like the bio side. You keep looking at it, it's like, oh, it's down 15%, because bio has continued to. We had that short term week last week that we traded. This week they're not doing as well, but healthcare continues to do well. I've showed the Anthem chart, United, Unum, all these charts, or Unum is tied to the finance side. So if anything's tied to the finance side, they haven't been doing as well. But these charts have been doing well. Posted this chart last night. Straightforward. We actually looked at it at open. You just didn't see it because I had it on the other layout. Didn't see the lines. I didn't post many charts last night. Posted 4. Those charts last night. Let's take a look. Here they are. CYH, FTV, got rejected at resistance. DN is had a chance from open if he bought on support. That is what you make it. This one's more macro, hard to take that trade. BRTA, pretty straightforward. On the break. Pretty straightforward. Now this is on the more again, some of these are a little all over the place in terms of bios, healthcare. Trying to again get the trades that have the technical and then they're not getting fucked by the bio sector in the same way. This chart's obviously not getting fucked by the bio sector, even though it's part of that idea. UYH doing better. How do you take this trade? It's on support. And it looks, one of these things doesn't look like the other. One of these things does not look like the other. Wait a minute. I thought you posted a bunch of charts last night. Only 4. I had about 20 bearish charts, but I'm not going to do that to all of you. I'm not going to post those. QBR is the other breakout one. Where? Oh yeah. Um, fucking VNet move. Um, hmm. Still right at the same level. Again, this sets up just betting on movement. You can easily straddle. I think again it's an important thing to add. You could just straddle this. You can straddle the market going into tomorrow and then fixing the direction of that going over the weekend to the upside if you want, right? To add some risk. I think you know. uh, we're in the very middle. We're not in the very middle. We're in a consolidation and very close to getting out of it, one way or the other. So again, we're sort of past all of the yield nonsense. We're sort of past. We're past stimulus. We're past a lot of these things. All that's up on the menu now is some digestion of some of the things that have happened in the yield market, and then new spending plans. And we're not going to get affected very much. Those are very sector specific, which it's all value oriented anyway. There's no such thing as growth getting stimulus, so or like spending from the government. That's just never going to happen. So there's it's pretty straightforward, right? Okay, give me 1 minute. Right, all right. Market crash. Mm. Spot VIX 6.5 so far. Only correlated to the downside. We'll see how much it grabs. We'll see how much it grabs. Not much betting still. Not much betting still, but again, there should be volatility. If the market's going down, we know it's at least correlated to the downside. So that would mean the spot VIX is going to go up. We know it's all fucked up though. It's way up here. Volatility is way up here. And that's because we see it on the IVs, right? That's what I talked about yesterday. Spot VIX is not the way to look at volatility or to use volatility. It's the IVs themselves, the implied volatilities themselves, will show you exactly the volatility in the market. But this is at least timing with the market going down, because if the market again is negative, then fucking spot VIX is positive, which I don't know. That's literally all it is. Short the VIX. Lol. That would have been bad. Okay, we keep going. Okay, we keep going. Nothing like some shrimp tails in your cereal. Mm-hmm. Carrying the Dow. CSEO carrying the fucking Dow. HD carrying the Dow. Walmart's still doing well from down here. It's at least not getting... The Dow has not reacted poorly in a lot of ways. XP has, Disney, the selling on Visa, CRM obviously has been down quite a bit. That's just fucked. UNH has been good. Nike obviously got fucked today. I wonder if... Hard whether to say... Wait to see what happens tomorrow. So, those are the Dow tickers. Obviously, most of them look the same. This like trend with the Dow. Apple, the tech side, are the ones still in this mess. But that's why there's so much upside, which is why it's sort of it's so strange where it is. Obviously down more today with all these numbers you see here, but Can it get movement here or what? Rip the Band-Aid. Rip it. I have another hypothesis for you all. So, March had the most calls ever, most options volume ever, right? What should be expected? That April would have the most options volume as well. But it's not. People are not spending their stimulus checks on options. If you go look at, I can't show the chart here like right in the moment, but you go look up just option volume, it's significantly down compared to the March peak, right? What happens if all of a sudden there's a lot less options and a lot of the underlying was being bought because you had to hedge all the options, all the calls? Well, if there's now not as many calls to hedge, then there's not as much underlying to buy. Some of the downtrend here can be attributed and should be attributed, of course, to market maker selling. The part of that and why it should be expected that the equity market still climbs is for the exact same reason, is that as the market pulls back, it becomes more and more opportune to buy calls, right? To trade to the upside. So it's sort of, it goes both ways, right? There's a point at which that gets sort of hits an equilibrium and then goes the other way, right? Teeters on an edge. So a lot of the price action, when you look at it, it looks very, that's why I talked about this melt up stuff is like a reaction to that exact thing and market makers buying just because they were just selling. We knew coming into the March monthly date that they were adjusting, right? They were adjusting, and then as soon as it was over, there was a whole new sort of dynamic going on. How much of it? We just don't. You never know. You never know. But a lot of it is very controlled. This is not selling. This is not like selling of long positions where you sell all your long position and it causes a massive sort of sell event. This is controlled selling, which is looks like market makers offloading risk or offloading their hedge. I would say that's a pretty close description of what we got. Whether it's true or not, you'll never know, but based on what we know for the upside, you could definitely attribute a lot of it to the downside, and we know that a lot of this was that, right? Going into March monthly. Now that we're out of it, the same thing applies that now no longer do any of those calls. They're not out here anymore. Any of the other long positions are now losing value. And it's going to turn immediately. The same thing. That's why we keep trying to preempt some moves and try to buy the lows. We're going to buy the low because the same thing happens to the upside. It just fucking skyrockets. As in a 4% NASDAQ day. I'm willing to lose a percent or two on every trade I get stopped out for the day the NASDAQ goes up 4% and I make 100, 200% on the trade. My cost for that trade on the loss side was 1 or 2%, maybe a few times. Right. But I think we can attribute some of that to those lower call volumes. And since they're low right now, we should be betting on higher volumes in the future. Which means if you get in before all of that comes in, then that means your pricing, your premiums are going to be going up by just demand alone, not even by underlying or by expectations or anything. So that's something to also remember. Which is why we've been getting so violent both ways. Also, a lot of tickers are not reacting to the average, so I don't know what exactly is. You can see this. This makes sense, but a lot of the tickers you can't see reaction, so I'm not exactly sure where everything is. A lot of tickers are not reacting at all. Looks like just megas, mostly megas. Whipsaw back and forth. How many days are we going to do this exact same thing, by the way? Microsoft's the only one that didn't get that whip to the upside. This is not very good for Microsoft, by the way. That trend line over here, I mean, it's got a trend line. It's probably going to be fine. But since it didn't put those points on, hold on. Hold the phone. Google's the one weakness we have on that side. The one weakness. The weakness. Let me just throw it. Let me just do it. Let me just do it to appease the gods. Oops, sorry. No, don't do it, Don. Don't do it. Don't draw that line. You're crossing the line, man. Hey, whose side are you on anyways? Now here's what I couldn't discern whether I want to. Yeah, we'll just cut it. We'll cut it. Rough draft. Rough draft. Like this, right? Like this. Do you know what that equals to? You draw this out. So again, if this is just this whole thing, but I'm just cutting it here, it's fine. You know what I mean? This whole thing. What does that equal? Well, first of all, this is 26. Let me widen this. 26. Oh, right here. Don't do it, Don. They're saying that one. That's 277. Let's give it the 269 nice. That's what that would look like. If that's true. Do we think this is true? I find it very hard to believe. That's kind of where we're at. Obviously there's some, you know, we know the bearishness on the growth side. We all know. Been talking about it for fucking months. We've avoided it 4 months. But That would require that would require for this to happen, it would require shorting and selling of long positions, which then goes to pensions. These big funds would have to sell off significant amounts. That's the thing to remember about the sell side is that you are going to affect everyday people. You will affect everyday people. So, are some of the largest funds going to sell things? I just don't see it happening. And they would have to do more than just sell. They would have to do more than just sell. They would have to be in such a way that they are not just selling and it's happening in the price. They would have to be you'd have to actually be coming out as a bank and as funds and pensions and expressing to the whole market that you think there's bearishness and that we're going to be, bear marketing the shit out of it. Not happening. It's not happening. It's almost so hard for now. I'm not saying that you can't be choppy back and forth and correcting and shit. I'm just talking about for like an overall market for like an entire this whole thing from start of February to April into May or something. For that to happen, the Fed just would have to stop providing and they would have to stop base spending and they would just need to not exist. But they do exist. That's the problem. Or that's the reality. They do exist. So it's a different situation, right? But that is what it looked like. That's what I was looking at last night. How does that form anything? It doesn't, because again, you have to put it into context. You can't just throw some lines on a chart and then be like, well, it does line up. Okay, sure, but is that what's actually going to happen? Probably not. Probably not. I had a lot of charts like this last night. A lot of charts like this last night. Again, this is such a active trading market. It's such an active trading market. Individual tickers, the tickers that have their own velocity, which we trade, doing their own fucking thing. Doing their own thing. Just doing their own thing. Not easy, but if you plan for it, it's doable. It's certainly there. Sorry, I'm trying to adjust this screen here. Try to adjust this goddamn screen here. These are not possible. Again, anything that I'm trying to enter here that's not these tickers that are just kind of like trending to the upside, and there's not really the same volatility in the market as the rest of them. Those tickers that are just kind of doing their own thing, those I'm not talking about. But tickers that we're trying to enter at lows here, I'm if they starting to head to the upside and they come back down, I'm just getting stopped out of them. I'm not trying to go, oh, now it's starting to come down, the market's starting coming down, like that UMC chart, right? This is not coming down as quickly. This wasn't coming down as quickly as the rest of the tickers. So, for instance, if you're in this trade, you don't sell up here because the rest of the market's coming down. That it's not. You can't do that. It's just not being disciplined. You can't like say, oh well, this one's different. I'm going to do it differently here. Again, you take one of these trades, you don't decide a percent higher that you're going to get out of that trade right there. What is the point of making the trade in the first place? So, for instance, the difference between, again, this up, oh, now down. Okay. Just because this happens on one ticker, you don't, and the market's doing it, you don't do it on others, right? You don't get to guess, oh, I knew this was the top. I should have sold it up here at the top. No, you don't have any clue. There's times when we have an idea of these things, and if we're already in profit, and we know we're ready to get out of a position, we'll be watching like that and go, okay, this is the top. Let me get out of here, right? Just because we're already sensitive to price at that point. Right now, you're not in that situation. You're in, you get stopped out. You're not guessing in 20 minutes that you should be getting out of a position, right? And you can't do it to other positions. Because again, those positions that do keep running, now you have this like this sort of conscious that is like, well, as soon as this starts to turn, I'm going to take profit because the rest of the market is. And then it's like, well, I guess now I'm just missing out on all my other gains. I guess that's what I'm doing. No, don't think so. Keep it going. Keep it going. Not easy. And again, it's really important to remember that volatility is very high, even though the VIX doesn't say so. Our if I think I'm gonna buy everything. I mean, I've already said that yesterday. I'm fucking buying everything. I'm buying everything still. What am I fucking waiting for? 2021. Buying everything. Buying everything. Brian says Oracle. Let's see. Is there a buy here? Buy it. Love it. I love it. I forgot what happened over here, but we talked about it, I think. I think because we talked about this move here, and I said, haha, I told you, 74. I like it. I like it. I'm buying everything, guys. Buying everything. I don't fucking care. I literally don't care. Am I being irrational? Trading stocks is irrational, guys. Brian says, someone slamming the T30s for April, LOL. 5,600. How much are those, though? How much does each one cost? $0.43, Brian, or $43? Fucking A. I'm guessing 43. Okay, okay. Okay, so that's not very much, then. That's like pennies. $43, like, Jesus, that's a lot of money. Not that, I mean, I'm not saying that $250,000 is not a lot of money, but for institutions that are like doing market makers that are providing liquidity and shit, like April 30s. That is a lot. No, it's not a lot. Never mind. That's not a lot. And they're only 43 cents for 30s. That shows you right there how much there is the risk. It only costs 43 cents for a $30 strike of April for T, because there's that much doubt that this will even move past its break-even point right now. It's at $30 right now. It's at break-even at this moment. And at the most expensive point it could be at, when it's at the money, it's at the most expensive point it could be at. In terms of risk movement, it's only 43 cents for a $30 fucking contract that expires in a month. It's so funny. I mean, I already said it. I don't believe in this at all, that it can move. There's actually a lot of problems that have occurred with the yields increasing. Why would you take the derivative here when you can get paid more with the fucking bond that's guaranteed by the US government? It's guaranteed to go get that yield from the Treasury. Every year. You're guaranteed to get it. That's better than the derivative on T. Literally. So you get paid more for a yield on bonds. That's kind of what that is. I don't know what it's going to take for this to get out of here. It has so many problems now because of that. It really does. It actually has so many problems because of the yields. That's something to remember on. I talked about it briefly when we first were getting the first spike, was that the S&P derivative, if you just look at the derivative of the S&P, the yields in the bond market were break even or better than that. And so why would you want to get the derivative of the equity market when you could get it from the bond that's guaranteed by the government? So it's all fun and games until T is 35. Well, you should bet on it then. 35? Let's see, how far is 35? I'm curious. 16%? You guys are like, I see tickers. GME's up 27%. T can do 16% easy. Percent that really confused people recently. That was the confusing part of going from tech to value. Everyone's like, wait a second, my tech stocks moved like 5% a day. Why is my value only moving 20 basis points? The fuck is this? This shit doesn't move at all. This shit sucks. Oh, it's different. Moves different. Gotcha. Yeah, exactly. No, it is true, and that's the part of not having the experience of trading that is really fucking difficult. And it's like learning a new, it's quite literally you're learning something new by trading that. 20% blink days. Yeah, 20% blink days turn into like 0.5% Dow days, and you're like, what is this good? Is this bad? Wait a second. I'm up 0.5%. My contracts are up 30%. What is happening? I'm only down 25 basis points. Oh, but my contracts are down 50%? I'm buying everything, guys. I told you. I'm buying everything. I have, due to some new information, so the whole thing with the VIX, right? What is going on over here? Right? What is going on over here? I'm not talking about, it's obviously coming down because we're starting to buy again and whatever. What exactly is going on with volatility? And why is it behaving in the way it is? And why can we only rely on implied volatility to make decisions right now? It's so easy to miss the most obvious thing on the VIX chart. What's the most obvious thing on this chart? On the spot VIX? What's the most obvious thing? Fucking COVID. Isn't this the most obvious thing on this chart? This big fucking elephant in the room that stands out over here? Okay, let's think about it. This is the bottom of COVID in terms of volatility, and then we started to come out of COVID, and then every time we have new COVID spikes, we were doing that for a while, and then the presidential election happened, and then we had some coming out of the Georgia election, we had this spike of yields start, and this idea that inflation was going to start, which was one of the only times that we actually had a good volatility spike, because it was on, the market was actually going up, technically, because it was rotating. So that was kind of a good day. But other than that, we have this downtrending, and kind of volatility that continues to be lower than the previous high, even though volatility is higher now than it was before, over here, right? Now, you could say that volatility has always done this. Why does it always do this? Well, because this spike that stands out has always caused the rest of the volatility not to really fucking matter. Financial crisis caused everything else to come down. I'm not talking specifically the VIX chart, but what happened during COVID, during the market coming down here? What happened during this time? Besides selling, what do? You put on, as institutions, significantly large hedges. You are hedged out of your mind. Okay? So you're hedged out of your mind. When you're buying down here, when you're putting new long positions on, you put on big fucking hedges. Those could be an infinite number of things. You're hedged. What's happening right now? The economy's coming back, right? The economy's coming back. What did you put a hedge on? Because the economy was fucked. It was in a recession. The actual economy was in a recession, even though the market wasn't. If you put hedges on because the economy was in a recession, and now a year later, the economy has rebounded and looking very good, and looking to be really be reinflating and starting an inflation that's more than we've had prior. We were in a deflationary state before, right? Before COVID, we were deflationary. We were not increasing inflation. Now we're increasing inflation. If you had a bunch of hedges that the economy was going to be in a recession for quite some time, and you don't know how long, so you have to hedge your long positions, and then all of a sudden, a year later, quicker than you expected, and obviously that's where all this reaction to the yields and everything else is happening, then what exactly is going on here? What is the one thing, besides the things I've already talked about and we've sort of hypothesized and seen confirmation and market makers, yada, 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 but overall macro understanding, what's one explanation on a macro understanding of what's going on here? Hedges are being removed. Hedges are coming off. What does that look like? It's really hard to exactly say what that looks like, but do you know what it looked like when hedges were being put on? The market was going up because it's spending. It's spending money in the market to hedge the market. You don't hedge on the way down. You hedge for this reason, for it coming down. You're hedging when the market's going up here. And so you're hedging and hedging and hedging. Remember the presidential election? It was the most expensive to hedge ever. What happened when what was happening here? It was extremely expensive. Extremely expensive, right? So there was still even more added here. What's happening right now? Hedges are coming off. What happens when hedges are coming off? Well, here's the presidential election. Oh, remove the hedges. Remove them. Right now, I have some confirmation taking off hedges. There's some institutions still now, just recently, taking off hedges from March of last year. They're actually taking off hedges from March of last year right now. Have confirmation. What that can do is cause some supply and demand issues where you're getting a lot of supply coming in. It's a lot of supply. It's not specifically selling, which makes it really fucking awkward to explain. But the reality is that there is a lot of supply coming as you remove hedges, which again are in a lot of different forms that you could be. Again, there are a lot of different ways you can hedge. There's a lot of things we can talk about with bonds and treasuries and how the way the yields have reacted, that's obviously removing a hedge because now you're selling bonds. You went into bonds because why? Because you're going to a fucking recession and the US government guarantees you that money, right? What do you do when things are really bad? You buy the US fucking treasuries. What do we do during COVID? The start of it, we bought fucking treasuries. We had a liquidity problem. The Fed had to supply it. Why is the Fed? Hey guys, why is the Fed supplying $120 billion a month of bonds, mortgage-backed securities, and treasuries? Because they need to provide supply, because at the COVID bottom, that's all anyone was buying, right? Yes, they were buying equities long, but they were using bonds to hedge them. So right now, you're removing bonds. That's one part of hedging, right? That's just one part of it. That's just one part of it, right? If we look at it through that lens, what does that mean? That means short-term volatility, but a lot of future gain, which is exactly what I've been talking about. But that puts it in a little bit more perspective of, if you think about it, okay, if bonds are being sold because they were bought at the bottom of COVID, and now that they were bought because the economy is in a recession, now it's coming back so we can sell the bonds. Now we can go into something more risky. But we're also removing hedges from the equity market besides bonds, and it's causing prices to come down. If we know by removing hedges the equity market's going down, then we'll wait to buy. You're going to wait to buy. How do we also know this is happening? The dollar is appreciating without anyone even converting to the dollar. No one's doing anything in the currency market. Nobody is doing anything. There's quite literally nothing happening here where people are going into the dollar for a safe haven. We know that. The yields are increasing, and this is increasing. Benchmarks are increasing. This is increasing. Swaps are not increasing. No one's going into cash, putting money under their mattress or anything like that, because there's not an outflow. There hasn't been an outflow, right? If the flows are staying the same, then that means that money is remaining. So if price is going down here, we can again atone it to the idea of this whole thing with derivatives, the entire thing with the derivative of the equity market, which is options. We can see a lot of that. We know when that's happening, but that's a short-term thing. That's the space in which we trade. On a macro side of things, it's these long-term hedges. That would cover the long side. Short-term is covered by, again, short-term volatility are market makers. Market makers hedging those options. That is 100% the short-term, and that's the space we're in. In the long-term, though, that would be the macro hedges that are involved with the bond market, again, the volatility market, and then also the notion of when you're buying, you're buying the underlying here of shares, then you're selling calls, you're getting involved with the derivative. You want a really silly explanation, for instance, Wall Street owning 90%, I mean, it's more than that, but the actual amount of it is like 90% of GME, and then they sold all those calls, right? But they're making more on the calls. That's just a hedge, is it not? It's just a hedge. It's just insurance, but they're being a little bit more speculative, taking advantage. But you do the same thing with any stock, right? Like Apple, who's providing all the fucking Apple contracts? Those that own it, right? But anyway, whether you want to believe me or not, or say anything, or care about the technicals, and you just want an excuse to buy things, yeah, I've been still buying. So I don't care about 1% or 2%. there's some areas, again, the same thing applies when trading in a short-term situation. I'm okay with missing a percent or two on plenty of tickers out there that are too risky. There's too much risk involved. That's not what I'm fucking talking about. I'm talking about the market in general. I don't trade the average, but I'm talking about the average, right? It's important to, again, discern those two things. I'm not talking about these really fucking violent price movements that you can go buy on at any point. No, you might be stuck in that for a year before you gain anything. You buy something dumb. Talking about the average, and then we're trading through that using those benchmarks to trade in a short-term sense. Ginger says he missed me. You had a lot of time, my friend. Or if you're not in it, you mean you just didn't see it. Yeah. No, there was. It's so. What's so funny is we talked about this open over here, and I was expecting it to happen again. Now I was in this position. So I had to get out over here, but I didn't sell immediately, and I almost got baited. Because I expected this to happen again because the Asian markets are down and this is benchmarked. This started over here to sell, and I was like, okay, that's the start of this. We started to come up, and I was like, okay, all clear, and I was about to not like be watching it anymore. Yeah, as soon as that thing started to come down here, you have plenty of time. These are 1% candles, by the way. 1% candles. You don't need much more than, I mean, how many 1% 5-minute candles do you need to get out of that position for sure? Yeah, I know you're not in, but for instance, that mentality there of like, this is such strange selling. If you think about it, each one of these is 1%. What is this like sitting around the campfire selling here? It doesn't even, I mean, it's almost like no one was actually in the underlying. That's what it looks like, is no one was actually in the underlying at all. It's just market makers selling against all the options being sold. Oh, you're selling us options? Well, we better sell the underlying. Oh, that's very strange. Which, I mean, it makes sense because, I mean, it does make sense because the actual value of the company is not on this exchange, but it's still, what a very strange way for this candle to look intraday, though. If this candle here, I would tell you 100 different ways that would look. It would not look the way it does on that intraday chart. It would not look like this. This very, very different look. Maybe I can show it like a little bit better. Like, I guess you can't really tell best, but it doesn't really usually look like that. Cute. And I've said, I do think that down here at the support, there's plenty of ways that you can treat a situation like this. Obviously, you don't get in immediately, and I said that with Viacom as well. But even though this happened, there are chances that they're risky, but there's a lot of ways in which you can profit off of a situation like this by being patient and then still, though, being aggressive when the time comes to pull the trigger, right? Because there is this, I would say, there's probability-wise chances of coming back into the supply. And I would say that everyone would think that anyway, but it's just the way in which it happens, of course. Now you have a timing issue of how, if this did this immediately, then how long is it going to take to climb back in there, is the question. It's the same thing with tech selling so slowly. I mean, not slowly, but it's not going straight down. It's selling like sideways, up and down. And so you can't really tell if it's actually going to sell down further or not, right? Like, is this actually going to happen, right? It would be better if it just happened immediately, right? And then you could make a decision off of that. It's when it's back and forth, you're losing time. That other chart doesn't give a shit about time. Do it immediately. Again, a lot of these, we do have some very good charts still. Aerospace and defense I do like the moves we've seen so far. SPR moving. These charts do seem, I know it doesn't look very good there, but they seem very strong down here comparatively. So it's still very much like that. So those were buys. So I'm kind of just sticking to the guns in terms of what I'm trying to bottom tick. But this I'm still on the semi side. But some of these again, it's hard to exactly tell. So you just kind of have to you either do it or you don't, and you wait a day or you wait a week, and it's all up to however much risk you're willing to take, right? Home builders again, uh, when trying to figure out, do I have to switch over to the other layout? Let me switch over to the other layout here. The home builder thing is very interesting, and again, this is very much tied to the supply idea. When I talk about semiconductors, there's a shortage of supply, which is going to cause prices to increase, which you'll see on the equity charts as well, right? And now we're not getting that immediately because it's tied to growth and getting brought down by an average, but there's still that idea. So same thing with the home builder side. The reason why we kept trading it is because, again, shortage of supply. It's going to cause prices to increase, which it has, and the equity market increases in relation to it. Yeah, it's swinging back and forth, but this is short-term volatility. Again, the moves back and forth in the short term has nothing to do with the long-term trend of a chart, right? Over an entire year has not these moves mean absolutely nothing. But they mean everything to our trades because those are where we trade. That's how we trade, right? We're taking advantage of those short-term swings while still understanding the long-term outlook. So, for instance, talked about how this is going to be bullish. Yeah, look, it's still within its channel here, but there's a lot of different things that have happened there, right? Short-term volatility. That's what we fucking trade, right? The same thing is still happening here. It still continues to climb to the upside because of this shortage idea of supply and price increasing. Yes, it's ebbing and flowing, but there's a reason why we keep betting on the low in the pullback every time because of that idea. So again, we're using these ideas across the market. Same thing with semiconductors. Yes, they've been bearish, but there's a lot of reasons that they're going to trend into the future, which is why we can take advantage of the short-term volatility because there's an expectation of upside every time, right? Important to see that. This trade here is a difficult one still. There's a lot of ways you can trade it from the pullback or on the break here. So, again, these charts, they do offer opportunities, and we like those charts that we can continuously trade. Like every few weeks, we're able to get into that trade. That consistency of getting to know that trade is helpful, even though it's not. We don't so much. You don't get into a rhythm or something, but it is nice to be able to go back to the familiar sort of trade, and it's very similar every time. You get used to the movement a little bit. You don't get thrown off and like, oh, well, why is this now down 5%? And should I do something here? Or if you already know, then you don't specifically know where price is going to go, of course, but you at least can manage the trade a little bit better and not be, not be completely, fearful all the damn time. We're buyers. We buy. See what we do here. We like fear, not our fear. I mean, maybe some of you. Best way to deal with fear? What's the best way to deal with fear in any situation? Competence. JJR says whiskey. Okay, that too. I guess if you don't have confidence, you can turn to whiskey. But that's the part, is knowing the possibilities, having experience, and being disciplined, and having a plan that will remove fear. That's the only difference. That's it. If there was no fear and everyone just thought the same way, price would just trade flat, probably, right? I mean, why does price just keep going up? Well, because the population keeps going up, so of course. Okay, sure. There's more people to build stuff, man. More babies. I love it. Make more, exactly. Not for me. So someone in here needs to make one extra. Make one extra. Two. Two extra. Still don't like where Google is over here for tech. Rough out there. Ryan says, apparently the pandemic has slowed the reproductive rate in couples. They decided that babies are too expensive and bad for the environment. I agree. Fuck bringing a kid into this cruel world. I also don't want to take care of a child. I mean, you know the real reason why there's less babies is our dicks are getting smaller because of pollution. Actually, that was the other part of that. Maybe Brian, you might be talking about the same article that this was in. They also said that semen is less effective, whatever the fuck that means. But yeah, they're not as good. Smaller dicks and not as good sperm. And now there's less productive rates. So, and I guess we're all fucked. Brian says mine's from NPR. Yeah, they're probably talking about the article. There was, I can't remember who. I think it was New York Times. That, I mean, everyone must be talking about the same article that came out, the data that came out. I don't know how they get the data for this shit. Like, are people just, what do they got? They're watching people have babies and watching dudes. I got no idea. Hey, get in here. We're gonna measure the average size of your penis. Oh, it's smaller than last year. And yeah, ejaculate into this cup, will you? Gonna test out your COVID sperm. And the COVID got you, didn't it? Yeah. I think that we're gonna be like this forever. We're always gonna have some sort of virus. COVID's just gonna be like the flu. The flu's always here. We don't act like the flu is. I mean, that's what Trump supporters, they try to be like, well, what about the flu? Yeah, people die every year from the fucking flu too, you know, asshole. So why don't we just wear masks all the time? COVID's not going away, folks. It's the new flu. We're always going to have some sort of issue now. I feel it. The old normal, this is the normal now. There is no old normal. Yeah, masks are. Yeah, usually I would get a cold and shit during spring and everything. Nope. Haven't got a cold, nothing. I agree. Masks are dope. warm during the winter. I mean, obviously, the human interaction part we need to figure out a little better because, again, it's kind of weird not to be able to do. You should be able to still do things when this exists, but I mean, then I don't need money if we stay like this. Cool. Yeah, I don't need money to do anything, right? Just stay inside. That's like all my friends that left New York. They're like, what do I need to live in New York for if I can't do anything? Like, I guess. Sure. Go live in fucking Florida. Good luck. There you go. I think everyone actually, the whole mask thing is just like a few loud people. That's it, right? We are buyers. Bum ba dum bum bum. They get this thing unstuck yet or what? I think I saw something. They were trying something new. I saw one backhoe out there trying to dig it out. We got our best teams on it, guys. It's still so fun. We got dudes out there with shovels and we got like 4 people out there working. Like, all right, don't worry, we got it. I mean, oil's still coming down now. The volatility is certainly the one thing you don't want to fuck around with is oil volatility. And hey, guys, I mean, listen. I'll make that joke in a second. Let me get the actual number. That's what it was. Listen, guys, you don't need to worry because oil. I mean, let's just talk about it, right? The price of oil right now. The price of oil right now, right? We're doing okay, right? We're doing okay. We were getting into why does it look like this? Huh? Not what I want. Okay. Price of oil, we were getting into the 60s, right? You know, we're down a couple dollars, right? But don't worry. The lowest the price can go is negative $37. It could only go to negative 37, so we're at $60 right now. It can't go much lower. Only negative 37, right? Those of you that don't know. Oil prices, and I'm specifically talking about WTI. That's why I was having a trouble there. I was specifically talking about WTI. The lowest it's gone is negative 37. You can't see it because it's the continuous, but... Anyone remember that time I went to negative 37 real quick? That was during COVID. That was the start of COVID. Just negative 37, no big deal. Volatility is pretty wild in oil. It's pretty wild. Commodities are so wild. Fuck being a commodities trader. Waste of time. You're like, oh hey, I'm up 5% today, and then you're down 30% the next. Like, oh fuck me, I guess, right? And then it's up again the next day. Okay. By the way, who was it? Matt, were you the one that said just driving around Africa? Can't remember. Whoever said that, it looks like they're actually thinking about doing it. Which is so funny. That they can't move this. It's been a few days now. They can't move this fucking thing. They're gonna have to drive it all the way, ship it all the way around Africa. Insane. Oh god, there's gotta be a. Oh, I don't even know. I thought the funniest part was that that ship drew a penis in the water before it went into the canal. which is probably like it happens all the time. I was reading about it. It happens all the time because you're sitting there waiting to go through the canal, so you're just kind of doing circles waiting. So you just draw dicks on the GPS, obviously. Like, what else are you gonna do? It's also sort of like the path in which you take anyway. Bunch of dicks in the fucking the the sea. But it's such a meme. I mean, it's gonna impact people. It's impacting us. We should be pissed. It's impacting our goddamn energy trade. Get out of there. Don't even push that damn thing already. Fucking losing money over here. Jesus. At least we have a new excuse to use. Always a good new excuse helps, right? Why did you lose money today? Well, there was a ship stuck. Well, the hogs infiltrated the capital. That was great. I made a couple mistakes that day. No worries. Fucking hogs infiltrated Congress. Capitol building was under attack. Good new excuse. Well, the old excuse, you know what the old excuse was? Before that one? Trump tweeted. That's why the market's down. Trump tweeted. Oh man, yeah, it happens. Yeah, it happens. Had nothing to do with the fact that I bought options that cost 5 cents and expire tomorrow, but yeah, Trump tweeted, wiped out my value. But it was a fundamental trade. It was a fundamental trade though. I day trade fundamentally, obviously, because the value of a company changes within every second, obviously. Because that's what price is the value, right? And it's really unfortunate that the president of the United States can make a tweet that affects the value of a company that he has no control over and has literally nothing to do with anything he tweeted about. Really sad. Unfortunate. But it happens. I miss that excuse. Yep. Yeah, the trade didn't work out because of Trump. No, tariffs. Now, let's just be honest. This is his fault. This is Trump's fault. This was the December to remember. We won't forget. We won't forget. It was only 7 tweets or so that led to 20%. 20%. In just 1 month. In 1 month, 16.5%. Well, in 2 weeks. 2 weeks, 16.5%. So when I joke about the S&P will never lose as much as GameStop did in 30 minutes, well, I mean, we did kind of do it in 2 weeks. So, I mean, to be honest. I bought that dip as well. That's where I bought Tesla. We have that trade recorded somewhere. I bought Tesla on that dip and made some money. Made a couple dollars. That was the one that was held though. Let me show you this one. Tesla 2018. So hard to find over here. Okay, coming into here. This fucking A. Coming into here. Losing it here. And buying over here. That's what I meant. I was in here, had to sell because of that. Let me rephrase this trade. I was trading Tesla before. My first trade was fucking back the IPO. But so we were in, lost all the money in December, had to sell everything in December. Right. You literally had to sell everything in December. You could buy the market on the dip, but there's a lot of situations where the market was fucked like this. Bought this dip over here. Bought the dip over here. This crazy day over here. If I remember, is this gap up. This over here. A lot of wanting to take profit. And then it led to this fucking fiasco over here, which we have. We have a record of this take profit over here on this day. The insanity. This is 2020, by the way. This is COVID. This is COVID. When did we take the first... What was the first Tesla trade It would have been, we didn't do anything in April still. The tail end of April. I don't think, I didn't take this trade here. I think it was here and after. It was right after here. Because we started trading at end of April into May. Like going truly long. Like I was taking like day trades and shit in here. Went long, took the first breakout. We took this breakout, traded it up to here. We took this breakout. This was the whole IPO thing, and then I bought on this day. Remember this one? This is right when the IPO is finally announced, and we bought the day before windbreakers. Now, that had nothing to do with windbreakers. That was just luck. Buying on support, luck for IPO to come through. We made that gain. And that was the end. No, excuse me. This is the one here. Fuck me, dude. I was looking at the wrong one. No. This is the trade that was normal. This is the trade that was the IPO. So we took this trade. The tightening. That was the tightening. This one over here was the support buy that we gained. This is the tightening for the IPO. And then it was windbreaker central. Traded that up. Now we've been fucked. Then we shorted it. Shorted it. Tried to go long. Nothing here. Got stopped out. Nothing here. Got stopped out. But we shorted it, which removes all bias. Good thing we're buying everything. It's still interesting price action over here. News. You could just basically connect the prices here, and we're just in the same trade, which we literally in the same trade. This just was noise. Short-term volatility again, just noise. Example of trade not to look at. That's why I said yesterday that this was just bogus. And I was like, whatever. Canals blocked, price went up. Don't care. I think that's an important probably aspect of that trade is to remove that. We do get that every now and then, but not that often. We usually get to the downside. Downside, something happens, and then we have to just pick the pieces up. Don't know what I want. And again, most charts, this is the small caps. Most charts don't look like this on the small caps. So in terms of looking at the average here, I'm using the same buy mentality of everything because we're at a support. Buy it. This is a great swing up, swing down. It's just the timing. How do you time this? What is this the timing here? This was consolidating, and then it rallied. This is a breakdown. Is this going to go right into an immediate whipsaw? Unlikely. But if the rest of the market does, the rest of the market's been consolidating, and the rest of the market does, then we've seen small caps will do whatever the fuck it wants when it wants. So it's entirely possible. So much of it's related to banks. It's very possible, and again, I'm bullish on banks here as well. We've been bullish on banks. We have the consolidation here. This is a great consolidation here. And there's a ton of possibilities still of buybacks coming through on banks. And we know there's actually a lot of, even if you go to like any side of the aisle, you know there's actually a lot of upside for banks just due to everything that's going on with interest rates, with the possibility of interest rates increasing. A lot of that's priced here, but all of it's not priced yet because we just finally had the Fed day. Some of it took profit from FOMC because this again was speculation that we would have a rate hike coming earlier, which we did, so we took profit. But it's still not pricing in the next speculative sort of period of that either. So I do like the next move just as much as I liked this one. So that will have the small caps. And I think M&A still needs to be thought about a little bit. We got a ton of mergers and acquisitions right to the tail end of Trump's presidency, right? Because regulations change under Democrats. But on the bank side, I would not put it past. That some of those are allowed to happen through Biden. Biden was the one that did the entire infrastructure for all of the bank regulation from the financial crisis. If there was anyone that was going to allow like some sort of, I'm not saying like workaround and like greediness to happen, but he would be able to transition those things probably better than any other president because he was literally the person that basically did all of the regulation. So he's probably going to be fine with it. So if there are things, and I think there will be things, it's really important to see kind of what's happened here and what could happen and who's going to do well. A lot of what's happened during COVID has proven a lot on the bank side. A lot of those regional banks are going to cease to exist, but they have money that's not going to go away. Their funds that they have will still be there. So they have capital that big banks will buy. Those regional banks are going to cease to exist. They're not going to be branches. No one gives a fuck about those branches. No one cares about those tertiary companies. They will be bought. And every single day, those things are happening. And we saw a lot happen, right? We saw a lot happen at the end of last year. Going into the new year, there's going to be a lot of those again, and probably coming soon, based on when we get new understanding of maybe some regulations from whatever Biden puts through. They're not going to hurt banks. Banks wanted Biden to win, right? It'll be smoother, though. It'll be smoother transition to go buy up all that capital. That's something not to look past and why we're really bullish on the big banks. They're going to dominate just like they have, right? They're going to continue to dominate. And some of them that are more on, it's important to, again, when you're looking at the banks, realize there's a big difference between the banks. Those that were heavy on credit, right, got fucked during the way COVID happened because of this idea of defaults. And then none of the defaults happened. And so then all of them were fine and did very well. And so there's like different things that happen. Some of them trade bonds more heavily, like Goldman is bond central over there. So they had some different pressing things. JP Morgan, they're the fucking commodity owners of the world. They got hurt by gold continuing to come down. Different things like this, they're going to matter, but they're all going to buy up fucking everything. So they're all going to buy everything. I'm a big fan. I like where it is. Think on the chart wise and short-term volatility wise, it's been very good. So we buy it all, baby. Let's take a break for lunch. We'll see. We haven't got much volatility yet today. I can't wait to see what happens when we remove volume for lunch today, because yesterday, well, it removed demand. Is it going to remove demand here? Well, we're at support in a lot of circumstances. Sometimes not, though. Sometimes we're in the middle of a move. It's going to be interesting. Again, bit of a challenge for sure on some positions. I would continue to use the idea of, or just use the practice of not looking at P&L. If you have a good idea and you're executing a plan, then if you get stopped out, you're going to get stopped out. Otherwise, don't look at P&L. Your P&L in the next 3 hours does not matter. Your P&L from yesterday doesn't matter. Your P&L from that big day you made from last week doesn't matter, does it? Because it's the overall that matters. So, again, we don't look at price for the next 10 minutes. For the next hour, we care about price next week and the week after that. We're not trading for the next 5-minute candle. So your P&L shouldn't matter either, and it doesn't. Your P&L is not the market. So keep that in mind, because it's very easy to get thrown off with the short-term volatility and forget what you're doing it for, right? So keep that in mind, and hey, I'm all about the pain, baby. If we get some pain during lunch here, I'm all for it. That short-term risk, I'll pay for it with the pain for that reward of in the future making that gain, right? Spoon says, okay for ideas towards close. What do you mean? Are you saying like buying towards close, or? I mean, I've been buying. I bought yesterday. I bought today. I'm like I've been saying. I'm bullish on everything. I'm buying everything. Uh, if we have a take profit close, then perfect. Perfect. Oh, you're saying if you didn't buy anything at open, can you buy during lunch? I mean, again, you should always be buying towards the beginning of the day, and then now when we're getting into lunch, you should like pump the brakes during lunch, which is why I say don't look at P&L and don't look at charts and shit. So like you should have already entered probably if you were going to enter in the next, if you're going to enter today, besides if you wanted to enter at close. So like you should, I would be careful if you're like trying to buy right now, because you're going to have a hard time gauging. This is again the problem. If you buy right now, you're going to have to just not look at your positions, and you're probably going to get stopped out of all of them. You probably get stopped out of all of them. So that's why we try to buy with the whole day ahead of us, and we try to buy at the lowest point we can. Sometimes you like if you're looking at SPY here, you bought here at open, and then you get stopped out over here. So then you bought down here. Like, but if you buy here, you might get stopped. I mean, it's going to happen, and that's why you're not making the trade for the next hour. You're making the trade for tomorrow. So it's okay to still buy right now. It just, you have to understand your mentality during the day that you're probably going to affect that trade. You're probably going to do something to affect it by just existing. So you have to just not look at it. That's hard to do. It's been very turbulent, of course. There's a lot of short-term volatility. And that's why we're not making trades for tomorrow. And we understand that risk is painful, right? To take trades is risky, and it's going to be painful. But I'll accept more pain today and more pain tomorrow for, again, the reward of next week and the week after that, and the year after that, whatever time frame it is that we're trading on. Again, the short-term volatility is what allows us to get the gain in the first place. So you can't stop yourself from taking the opportunities. And so if it's at lunch, fine. You just woke up, you were worried about making a position earlier, whatever the reason is, that's fine. You just need to know why you're making that decision, right? So that you don't just get out of it, and then the next day, like if price is up tomorrow or goes up all day today into close, and then you go, well, hindsight capital, I wish I bought earlier. Well, you have to make that decision right now, and you had to make it at open. And that's why I was like, I'm going to fucking buy. Right over here, I just said it again. Right here, right in this 11 o'clock, this 10:50 to 11 o'clock area, I just said again, you know what, fucking, I'm going to buy everything again. You just need to do it. You just have to fucking do it. And again, I'll accept some pain. If it's going to hurt me tomorrow, then let me fucking hurt and be in pain. I will do it. I can afford the risk. Some of you can't, sure. And you're going to have to be more patient. You're going to have to, again, you're going to have to wait. And off of my buying, you'll be able to buy. You'll be able to buy off the market's buying. You'll have to just be, again, you'll lose some points. That's okay. Some areas I'm willing to lose some points because I don't know either. But don't watch P&L in any of this. It's not going to help you. You're in a position? Great. You're in a position. That's awesome. That's great. If it's up right now, then great. And you're not losing money, then great. It's not about right now, though. Again, how many of you made, some of you made a shit ton of money. I'm going to just roll before we go to lunch. So this week has been a little bit back and forth. Obviously, Monday was, or I guess some of you, oh yeah, Monday was a weird day. I thought Monday we were going to have more profits from you guys. But the week before was a great week. The last week, people made a ton of money in the group. People made a ton of money last week. How quickly do we forget that you had a lot of great trades last week? And now you're having a tough week this week, right? It's like, so what was the point of even making those gains if you're going to be in so much pain this week, right? No, the pain is not equal to the amount that you made last week or the week before or the year before, right? You understand that it's a short-term volatility and has nothing to do with your actual gain, right? So keep that in mind, and it's just fucking lunch, guys. Go take a hike. If you have fucking mountains near you, go outside. Do something. I'm not going to sit here. I'm not going to sit here today. I promise you. Right now, I'm going to hang up this fucking call. I'm already in positions, and I'm going to walk the fuck out of here, and I'm going to go do some sprints outside, sit in the park, have a nice one. That's it. You should too. If you don't want to, you want to play video games, anything else, it's fine. You don't need to trade, though. You don't need to. Brian says, tell more people you trade. Yeah, I'm gonna try to go pick up chicks and tell them I'm a trader and see how many run away. I'll let you guys know. All right. Enjoy your lunch, guys. I'll see you in the afternoon. Again, don't kill yourselves. And I don't mean literally rope. I mean just like during lunch, don't kill yourself. It's just fucking trading. And it's just 1 hour, few hours out of a fucking year. So chill.